Hi everyone, Happy New Year and welcome to 2026. Today we're diving into a big one, a full wrap up of what actually happened in markets and the global economy in 2025 and what it means as we head into 2026. Now, if it felt like 2025 was chaotic, you're not wrong. We had a political shock, trade wars, surprise rate cuts, geopolitical flare-ups, and one of the biggest AI investment booms in history. And yet, despite all that, investors walked away with strong returns. Now let's break it down month by month, pull out all the key themes, and finish with what markets look like from here going into the new year. 2025 kicked off with a major divergence across global markets. US markets wobbled in the early months of President Trump's administration as it shifted from anticipation to uncertainty, especially with rhetoric around economic nationalism and culture wars. Meanwhile, Europe and China surged ahead. Investors were drawn to cheaper valuations and strong thematics like defense, EVs, and new Chinese tech developments. Bond yields jumped globally as markets priced in higher inflation and stronger growth. February was eventful. President Trump announced a wave of policy changes, including creating the Department of Government Efficiency, led by no other than Elon Musk. That unsettled global investors and triggered a rotation out of US equities into Europe and China. Australia had a volatile reporting season, and the RBA delivered its first rate cut since 2020, dropping the cash rate down to 4.1. March was dominated by rising trade tensions. Tariffs were announced across multiple sectors. Steel, aluminium, pharmaceuticals, electronics, and markets reacted sharply. The S&P 500 nearly fell 6%, and even the US dollar, normally a safe haven, dropped. Gold broke through 3,000 an ounce for the first time ever. Economists started increasing the probability of a US recession, and European Central Bank cut rates to support growth. April brought one of the biggest market shocks of the year. President Trump announced sweeping reciprocal tariffs of 10 to 49% on all trade partners. Markets tanked. The S&P 500 fell over 11% in a week. The sell-off only stopped when Trade Secretary Scott Bessent intervened, warning about the risk to the US dollar and Treasury markets. A 90-day pause on tariffs gave the markets breathing room. May saw a fragile truce between the US and China, and tariffs were reduced to more moderate levels. This is where the phrase "Taco, Trump always chickens out" was born, capturing the idea that aggressive rhetoric is often softened under pressure. Markets rallied globally, and the RBA cut rates again. Australia's IT sector rebounded, and gold miners performed strongly. June was all about AI and data centers. The Nasdaq surged, the S&P 500 hit new highs, and East Asian markets, especially Korea and Taiwan, had some of their best months ever. Oil spiked briefly due to a 12-day Israel-Iran conflict, but quickly retracted as tensions eased. July delivered market highs, helped by President Trump's One Big Beautiful Bill, which extended and increased tax cuts. Bond investors weren't thrilled. Deficits are expected to rise by $3.3 trillion over the decade, but equity markets love the stimulus. August was a classic ASX reporting season, volatile, surprising, and full of big single-day moves. Value stocks outperformed growth by a margin, small cap surged, and healthcare had a brutal month. CSL had its worst trading day ever. September was one of the biggest months of the year for tech. OpenAI and NVIDIA announced a $100 billion partnership, and Oracle unveiled a $500 billion Stargate data center in Texas. This triggered a massive rally across global tech supply chains. Emerging markets, especially Asia, were huge beneficiaries. The US Fed also cut rates for the first time in 2025. October brought a US government shutdown, interrupting economic data releases, not ideal for central banks. Despite that, the Fed cut rates again. Gold smashed through $4,000 an ounce, and markets kept on climbing. Markets cooled in November, especially speculative assets like Bitcoin, which fell over 16%. But earnings were strong. The Magnificent Seven delivered 21% annual earnings growth. December was flat overall, but East Asia continued its historic run. The S&P 500 finished up 16.4%, a remarkable turnaround from the chaos earlier in the year. Despite the noise, the global economy remains resilient. Earnings growth looks solid, inflation is easing, and central banks are cautiously cutting rates. Returns in 26 may not match 25, but broader opportunity sets look attractive, not just in equities, but also bonds, credit, property, infrastructure, and alternatives. This is where a well-diversified portfolio can be positioned to deliver strong real returns over the medium to long term. So that's the whirlwind that was 2025, a year of volatility, surprises, and ultimately strong performance for diversified investors. Until next time, we'll be watching.